Welcome everyone. Thanks so much for being here. It's great to see new and returning faces. We're all really excited for the first installment today of what is going to be at least a year-long series of talks titled Russia and Its Neighbors in Search of a New Paradigm, led by Dr. Yevgenia Albats. My name is Sasha Shpatalnik. I'm the program administrator at the Jordan Center for the Advanced Study of Russia. Unfortunately, our director and the chair of the department couldn't be here today, so I'll be introducing in his stead, and I'm honored to do so. So Yevgenia Albats is a research professor in the NYU Department of Russian and Slavic Studies. She's an investigative journalist, a political scientist, author, and a radio host, and since getting her PhD in political science from Harvard University, she's been splitting her time between academia and journalism. She was a professor of political science at the Higher School of Economics and the first professor to be fired from the Higher School of Economics on the request of the Kremlin. She's been editor-in-chief of the political weekly The New Times since 2007, and also a talk show host on Echo Moskvy until the station was taken off the air after the start of Russia's full-scale invasion of Ukraine. Now her show, Absolute Albats, continues on her YouTube channel, which you should all follow, and today's recording will be uploaded there, as well as on the Jordan Center's YouTube channel. Dr. Albats was previously the Distinguished Journalist in Residence at the Jordan Center from 2022 to 2023, so we're really thrilled to have her back. She's also been a Media and Democracy Fellow at the Harvard Kennedy School and a Fellow at the Davis Center for Russian and Eurasian Studies at Harvard. She teaches political science at the Harvard Extension School now and is the author of 4 independently researched books, including The State Within a State, The KGB and Its Hold on Russia, Past, Present, and Future. And before I introduce today's esteemed guest, I'd like to take a moment to let you all know that the next installment in this series is going to be on October 28th. We're going to be joined by Julia Yaffe, journalist Julia Yaffe, who's going to discuss her new book, Motherland, A Feminist History of Modern Russia, From Revolution to Autocracy. That'll be at 4 p.m., probably in the same room. So please mark your calendars now and follow us on all of our social media platforms and join our mailing list if you haven't already. That's the best way to stay up to date with information about what's going on in this series and everything else happening at the center. Okay, without further ado, today's talk is titled, How Long Can Putin Sustain the War Against Ukraine? And we're so excited to be hosting Dr. Oleg Itskhoki, professor of economics at Harvard University and co-author of the renowned Itskhoki-Lukin model of exchange rates, which is a widely taught as a foundational concept in economic departments worldwide, with a BA in economics from Moscow State University and an MA in economics from the New Economic School and a PhD in economics from Harvard University. Oleg's academic journey has been marked by numerous accolades. He was awarded the 2022 John Bates Clark Medal, the most prestigious award for economists under the age of 40. He participated in the Review of Economic Studies tour, served as a Sloan Research Fellow, and received the Excellence Award in Global Economic Affairs from the Kiel Institute for the World Economy. Notably, he was also included on the IMF's list of 25 influential economists under the age of 45, and prior to his time at Harvard, Oleg held the esteemed Vinu and Anna Kotmaraju Endowed Chair in Economics at UCLA, and he also served as professor of economics and international affairs at Princeton University. So thanks so much for being here with us today, and I'll hand it over to you, Dr. Albats.
Thank you. Thank you very much, Sasha. Thank you very much to all of you for coming. It's very nice to see, many familiar faces again. I'm really grateful, and before I say anything else, I'm really grateful to the Department of Russian and Slavic Studies and its chair, Professor Anne Lansbury, Jordan Center of Advanced Study of Russia, and its director, Professor Josh Tucker, and its executive director, Alexander Shpatalnik, who basically runs the center. And also, I'm grateful to Vice Chancellor, Vice Provost for Global Programs, Professor Leonid Borenstein, and finally the President of the New York University, Professor Linda Mills, for bringing me back to NYU and giving me another opportunity to explore the subject of my academic and journalistic passion, which is the role of institutional arrangements in the post-communist world and in Russia first and foremost. And I'm absolutely honored to that the inaugural speaker at this at least year-long series is Professor Oleg Itskhoki. He was my guest at Echo Moscow, where I was still in Moscow, and he already was in the United States at UCLA, and he was the first hire at Harvard over a decade. He the first tenured hire at Harvard over a decade, and he's the youngest tenured Harvard professor. And also, of course, that the Clark Medal is widely considered by economists worldwide as the best predictor for Nobel in economics. So I'm just expecting, the next invitation to introduce him in Stockholm, of course. So anyway, but we're going to talk, of course, today about much less enthusiastic subjects. We're going to talk about the how long Russia is going to sustain this awful war of aggression against Ukraine. As of today, October 17th, 2025, it has been 1,331 days since Russia launched its full-scale invasion of Ukraine on February 24th, 2022. For those who know, in the Soviet Union, we always used to count everything against the Great Patriotic War, the war which between the Nazi Germany and the Soviet Union, which lasted for 1,418 days, from June 22 to 1941 to May 9, 1945. And all the nations of the then Soviet Union participate in the war that cost Soviet Union 27 million lives. So in mid-January, we're going to reach this milestone of the war against Ukraine. And it's just impossible to even comprehend. How is it possible that the war is still going on, that as if, just last night, Russians bombed Kryvyi Rog, Russians bombed Kherson, 60% of all Ukrainian gas reserves are now, cut off. There are lack of electricity in all major Ukrainian cities as a result of just last night bombing. There were all kinds of, predictions that Russian economy was going to collapse. That in May we were seeing, Russians were lacking, Kinzhal and Iskanders, and probably Russian economy is no longer capable to sustain the war. We're seeing that in October 2025 now, just in 2 weeks, they exceeded, the amount of missiles sent to the major Ukrainian cities, by far, what they had in May. So it means that Russian militarized economy is capable to run this war, to incur all these costs. So Oleg, my question, and trust me, we spoke many times with Oleg about that. I fail to understand why Putin is capable to sustain this war, please.
So first of all, thanks so much for the extra generous introduction. Not fully deserved, but thank you nonetheless.
Expect a card when you will get your novel.
I will take maybe 20 minutes to talk about some facts, and then we'll switch to questions, right? Like, you don't mind I take 20 minutes, right? So just to be clear, I'm not an expert in Russian economy. I did work on sanctions. I did some academic work and some policy work on sanctions, but so I follow what happens in the country. I'll speak as, just a general economist with some basic facts. So obviously, some of my facts are not exactly up to date. They could be updated. You'll see some of the charts, can be updated and so on, but it should give a gist of where things stand. And like, some things are just facts, and we can kind of discuss them. Some things raise more questions than provide answers. So you'll see that as well. Yes. So one other thing I was going to mention before I go is when I talk with my friends, people typically want the question like how things are, in the sense that they are like either, like fully sustainable and will last forever, or they're terrible and things going to collapse immediately, right? So as it turns out, a lot of forecasts tended to exaggerate things, right? They tended to exaggerate things. When things are bad, they tended to suggest that they're catastrophic, but things tend to be bad without being catastrophic. And that's kind of sort of like the best description of it. Like it's not a situation that anybody should argue is sustainable forever, but it's also, there are no obvious signs that kind of economy is becoming a bottleneck that will stop the war, right? And this is where things stand. And people usually are not satisfied with that answer. They want it sort of either one way or the other, but things are really kind of like this, sort of like a lukewarm situation, which can, in principle, continue for extended period of time. But let me give you some facts, and then we can discuss things in more detail. So the first question, which one wants to maybe think about, is Russia a large or a small country? And, there is no doubt Russia is a large country, right? It's a top 10 in terms of size of the economy in current dollar GDP. So I want to make a remark. Oftentimes in the news, you would see that it's a, top 4, top 5 economy with PPP adjustment. It's kind of bad practice to do PPP adjustment when you talk about the total size of the country. We do that when we talk about GDP per capita, right? And GDP per capita wise, Russia is still sort of a developing country, right? Or like emerging market, or like, catching up economy. But in terms of total size, it's a big country. But when we talk about big countries, there is difference between big and very large, right? Like, and like if you compare, here's just a comparison of, different countries by size. US and China are the largest, but actually we oftentimes forget that in this discussion that European Union is as large as the US pretty much, right? In terms of population, in terms of its total size of the economy, depending on which countries you sort of include in broader Europe, it's as big of a region as the United States. And so given this, it sort of raises a question, kind of why US plays such a key role, why European Union cannot do a lot of things. And sort of when you look at it, well, first of all, you see that Russia is about 10 times smaller than either US or China or European Union for that matter. It's smaller than Canada, and it's actually smaller than the state of New York in terms of GDP per capita. And New York is the third largest state in the US. And so given this, it sort of raises the question why it's sort of so difficult to stop the war using the economic tools, right? Like if you accept the fact that Russia has very large amount of nuclear weapons, perhaps it limits the military solution to the problem. But given the size differential, why is it so difficult to kind of solve the problem with some type of economic tools? And that's why people were very hopeful that sanctions could be kind of potent in putting a stop to the war. And the war is in its 4th year, right? And so clearly this didn't work. The other thing to note from the slide is Ukraine is 10 times smaller than Russia. So it's a war between a country that's 10 times as large. And sort of what's remarkable, I mean, Ukraine had obviously remarkable economic problems because of the war. A large chunk of GDP was destroyed. A big part of the country is occupied. But even with the pre-war GDP, if you take the numbers, Russia is spending on this war every year roughly the size of the Ukrainian pre-war economy. So like the expenditure on the war is somewhere between 150 and $200 billion per year in Russia, and this is the size of the Ukrainian economy before the war. So these are just remarkable numbers, right? And so this is useful to keep in mind. So when we presented our paper on sanctions at Brookings, it's publicly available. So we sort of summarize the history of sanctions on the Russian economy since 2014, since when the war truly began, and then the second wave of sanctions since 2022, when there was a full-scale invasion. Sort of one of the comments during the discussion was that, well, sometimes if the problem is a military nature, maybe there is only military solution to the problem, and trying to pretend that there is an economic solution to a challenge that doesn't have an economic solution, that requires a military solution, is maybe kind of stupid. And this is what's been the complacency for Europe and US to some extent, but mostly for Europe, to try to think that there are ways of solving this problem, without really understanding that, that this is something that, can be only solved with military means. Of course, if there is a solution that doesn't require military means, it's kind of probably preferable. But so far, sort of like clearly the things that's been done economically have not played out the way, countries might have imagined. And so here, when I mean a military solution, let me, Yevgenia kind of raised it partly, right? So we were talking in the beginning of the war that Russia will run out of like missiles, given the frequency of its use. Right now, Russia produces more missiles per day than it's using. And that's the outcome of 3 years of sustained war that like, it basically built a military economy. In the meantime, Europe failed to do it. I mean, U.S. sort of withdrew itself from that conflict, which in my mind is myopic, but this is something that the U.S. can do given its, given the fact that it's like a regional conflict from the point of view of the U.S., which is sort of far away. But for Europe, the fact that Europe does not create any parallel military production during the same period is kind of like a completely crazy outcome, right? So this is the time when Russia and Ukraine ramped up military production, and Europe is right there and sort of doing nothing about it. Even if this war starts, Russia will keep producing the drones and weapons. And so this is the problem for Europe to solve kind of better sooner than later. So you see some military investment that Europe is doing. And given the size differential, you'd think it wouldn't be such a big problem, right? I mean, obviously, everybody remembers COVID's time when COVID was such an acute problem to solve. All the resources were put into it, and you can do production of vaccines in 1 year, right? Obviously, you can do production of drones and weapons in 1 year as well, and it just hasn't been done. And so this is what I, to be explicit, mean by, part of the military solution that was completely overlooked by Europe. Maybe things are moving somewhere, right? With Germany having sort of like allowed now for debt financing of both military production and support to the economy, maybe things will move, but they haven't in 3.5 years, right? And so this is kind of one big question, or two big questions, right? Is there an economic solution, which is probably preferable over military? And if there is none, why Europe and US, we have a kind of understanding why, but why Europe was so slow to kind of respond to this? And this is in my mind one or two big questions here. Okay, so now we need to talk about the state of the Russian economy. And so what's very important is that something that my co-author, I think my co-author, Elena Rybakova, coined this term, but maybe somebody else did, something that's called economic fortress Russia, right? So Russia started the war in 2022. The whole world, including Russia, were coming out of pandemic, but Russia had years of sort of preparation, if not specifically for this war, then for some other events of the scale, which could be sort of called, this whole preparation could be called economic fortress Russia, right? And so what's very important, and I mean, this is a big contrast between the Russian economy and sort of the Putin's time and power with a lot of other emerging markets, developing economies, is that it was a period of big fiscal conservatism, right? Where there was fiscal surplus, there was current account surplus. Russian budget was sort of like designed to break even at $40 a barrel. Oil prices were sometimes below, but typically above $40 a barrel. So whenever they were above, resources were accumulated. And when there was temptation to use resources, in particular during the pandemic, like many rich countries would use those resources to support the population, Putin was very fiscally conservative and didn't use the resources very much in preparation for something more important than pandemic. I mean, as it became clear in retrospect, right? And so it looks like, and so Yevgenia has her friends in Russia. Some of them contributed a lot to building this very resilient and robust economy and a lot of macroeconomic stability behind it. So Russia had little debt. It had a large amount of FX reserves, partly with central bank that were frozen, partly with the treasury that had the stabilization fund that's sort of being used. And this is the previous 15 years of very responsible, fiscally conservative policies that most other countries lacked, right? So now there is this interesting question: is Putin truly like a very responsible leader who did it out of like belief that macroeconomic stability is essential? And so I think it was a type of populism which was feasible given the really good macroeconomic conditions for Russia, a big oil exporter at very high oil prices, right? So what we're seeing now, there is no fiscal conservatism left during this war, so we'll talk about this. But sort of before the war started, there was really no trade-off. It was easy to do, given how high the oil revenues were, and sort of this is the big reason why things can last this long that they last, is that Russia came to 2022 in really good economic shape. Another thing that is kind of important is it was not a dollarized economy. One reason why it was not dollarized, it was very long period of macroeconomic stability with low inflation. Everything within Russia switched to sort of being fully non-dollarized. It took about 20 years. And so one leverage that foreign countries could have had if there was more debt, especially more debt in foreign currency, and if there was some like, local debts in foreign currency, like, I don't know, mortgages in dollars or something like that. And none of that was really like a big feature of the Russian economy anymore. And that gives a lot of sort of levers for the domestic policy to address, the crisis, which they used, and they used it very effectively in 2022 to really stop the economic crisis that potentially could have started in the first weeks. So, like what I usually like to say here is it's much better when developing countries with authoritarian kind of regimes don't have macroeconomic stability, because that prevents them from starting wars. Having macroeconomic stability is something that really sort of makes it feasible to start the war and sustain it, as we can see now, for a long period of time. So I wanted to talk a little bit about economic growth in Russia, and this is slightly out of date. This is the forecast as of January 25 from the IMF. They reviewed this forecast this summer, and I think they're probably reviewing it now again. So this is the week when the new forecast will come out. So right now, I mean, Russia is kind of on the sort of like balancing on the brink of a recession. There is recession in most sectors of the economy, and there are a few sectors that are related to military production that are still growing. And so the current forecast of the IMF, which is always conservative to predict recessions, it sort of like tries to be fairly conservative with predicting economic declines. It puts the growth for this year at 0.6%, less than 1%. And there is a decent amount of, a decent probability that would be reviewed to a negative number by the end of the year. But it's a small positive number right now. It's been an economic slowdown that's lasting already for about a year, right? The forecast for the next year is about the same. But what's important to emphasize, the slowdown is not a collapse of the economy. It's not a crisis, right? It's just a slowdown, right? It was growing at almost 4% in the previous year, and now it's 0, right? It's not a recession really. It's just a slowdown, and so you cannot really extrapolate from it to some major crisis event. The other thing that I want to point out is, all the sanctions that were used in 22, there were, big financial sanctions, there were trade sanctions, there were all sorts of like banking system sanctions and so on. They resulted in the decline of only 1.2%, right? So this, Russia is the most sanctioned economy in history, right? That's what's being said. But this full force of Western sanctions kind of resulted in, in this decline in 22, which kind of was followed by fairly fast sort of recovery growth and then switch into a military economy, right? So what's important to keep in mind, so you really have to have this comparison in mind, right? The comparison, this is the year when Saudi Arabia, for example, grew almost 8%. Because really the feature of 2022 were the extremely high energy prices, right? And so the counterfactual was really that Russia would have probably grown by 5 or 6%. And instead there was a decline of 1%. So this was a meaningful effect of sanctions. It shouldn't be underemphasized that sanctions played a role. They shaved off a big amount of growth, converted into actually a decline, but it's just not enough to stop the war. And this is what I'm saying, that sometimes maybe economic means are just not enough, and it's maybe myopic to think that just economic sanctions in the world that we live in can solve all sorts of problems. And you have to keep in mind, Russia is a large economy, but not the largest. Many countries might have nuclear weapons. And so if a state going rogue like Russia can do this amount of damage, right? Like we're living in a world where there are many countries of that magnitude that could do damage as well, and economic tools are just not going to be enough to stop it. I think this is a big question to think outside the context of Russia and Ukraine specifically, but we're transitioning to a world which can look very different from sort of what we're used to. The other thing I was going to say is, when we talk about sanctions, I think now we have a lot more understanding of how they work, but this is imports and exports in Russia, right? And so as you can see, this is really where, this is the impact of sanctions right here. They decline, they made imports decline for a very brief period of time. So they had a bite for about 4 months, right? And after this 4 months in 2022, imports started recovering, and imports recovered to where they were before. So if you just think that sort of like, you can evaluate the impact of sanctions by how much they can push imports down. Well, they didn't really push them down at all. We'll talk a little more about it, like what happened. I don't want to extrapolate from this to say that sanctions did not have any bite, but clearly they had much less bite than one might have expected. On the other hand, you see this dramatic increase in export revenues, and this is all driven by high energy prices in 22. And so these bars are the extra money that were made each quarter between exports and imports, right? These are the trade surpluses. They were of the order of magnitude of over the year, this was about $200 billion, right? So like basically the extra surplus from trade just in 2022, when the war already started, could pay for the next year of war, for 2023, without using any reserves, right? And so this is what's important to keep in mind. So that the state of thinking was, if you do import sanctions and you do it well, it's like good enough, maybe together with financial sanctions. Well, what this shows with a commodity exporter, especially if the fact that it's a major commodity exporter pushes up the energy prices when it starts the war, it's kind of a mechanism that instead of punishing the country for starting the war, kind of compensates it with extra oil revenues, right, in that year. And that's exactly what happened in 22, which paid for at least the next year of the war after that, right? And so financially, the sanctions really failed to kind of curb the amount of the resources that Putin had, right? And maybe it was myopic to think that they would be as efficient as policymakers hoped. But it's important to point out that Europe really didn't do embargo on Russian energy until the end of the year. So there was a full year when Russia could do adjustment without really facing the more important sanctions, right? Like Russia couldn't buy luxury goods from Italy, but it could sell energy resources to Europe, and that was kind of probably the most important economic missed opportunity for the coalition of Western countries and Europe in particular. This is kind of completely fascinating, and I think economists underappreciated this. So the first is January 2022. It's literally 2 months before the start of the war. Europe is buying more than half of Russian oil. And it takes less than a year to fully switch customers. And I think economists underappreciated how quick the substitution can happen, right? Like people tend to think that things take a long time. There was industrial lobby in Europe saying that substitution will take forever. It will kill European industries. But what happened by the end of the year, both Russia managed to switch, exports to other destinations, in particular to China. China started buying about half of Russian oil, but also India became a completely new customer that didn't exist before the beginning of the war, and Turkey became a meaningfully large customer. And so between China, India, and Turkey, most of Russian oil was placed in these 3 countries, right? Same thing happened in Europe, right? Like what policymakers really feared is that the substitution will take forever, right? And like it really will result to a collapse of the economy. Well, actually, Europe managed to find a substitution to Russian gas. And people thought that gas is much harder than oil because gas is much more regional markets than oil markets. But nonetheless, that substitution happened quick. And what it suggests is if there are strong economic forces behind it, things adjust. And the policymakers need to take it into account, right? But if there are no economic forces behind it, if nobody is using money to expand, for example, military production, it will not start by itself, right? And so it does require conscious policymaking. It does require probably some pain that, energy prices were high in Europe in 22, but adjustment does happen if resources are put into it, right? And COVID gives us exactly the same lessons, right? If you put resources into it, most economic problems can be solved. So one other thing to see here is if you ask where the sanctions, and in particular US sanctions, were successful, I mean, it's partly, it's an ironic comment, but the sanctions kept the quantity of Russian oil very stable. So this was a big concern of the US policymaking, is like, how do you curb Russian revenues without actually having less Russian oil on the market, so that oil prices don't go up? And if there was one success of the policy, is the quantity of oil exported stayed roughly, I think it's 8 million barrels a day. I think that's the number, and it stayed very stable, right? And up to now, Russia, in terms of quantities, exports the same. What's changing is really the oil price, right? And so the dates are too tiny here, but this is 22, and this is the peak oil prices, about $120 a barrel. Now they're actually back to 60, to the pre-war levels. They're not at 40. So like one thing to remember is that Russia would have run a balanced budget at 45 before the war. Now it cannot run a balanced budget at 60. So it's a major change, right? First of all, it's no longer budget surplus. It's still higher oil prices than before the war. And there is an interesting discussion to be had that the dollar is not the same. I mean, there's been inflation, so $60 now is not the same as $60, 5 years ago. But also the value of the ruble has changed, right? The ruble was stronger before the war. And so this is another thing to keep in mind. I don't plan to talk much more about it, but ruble is one of the instruments in the hands of the Russian government that if oil prices are going down, you'd expect ruble to depreciate. And since a lot of the domestic expenditure is in rubles, it gives a buffer for adjustment, which Soviet Union, for example, didn't exercise because it kept a fixed exchange rate. But for Russia, it's one of the definitely one of the tools that can be used and would be used if oil prices keep going down. And that sort of kind of extends by a lot the fiscal kind of capacity of Putin's government to both run the war, but also to finance the domestic expenditure. So I'm going to talk about two economic problems, and I plan to two economic problems and one kind of like, I don't know how to call it, maybe strategic problem or big long-term consequence of the war. So there is a very acute current economic problem, and this is inflation and the interest rate. And so the sanctions did have a big bite. They did result in prices going up in Russia, and this was not monetary inflation, right? This was not because aggregate demand was expanding. It was because foreign goods became expensive. So sanctions did have a bite, and you can see it in prices going up and goods becoming unavailable, which required substitution. But this is a temporary effect, right? So there was a window of about 4 months when economic problems were acute in 22. Right, and that was reflected in different measures, but you can sort of see inflation, and you can see that the Central Bank of Russia had to respond with sort of all the tools, including raising the interest rate to 20%, which at the time was completely unprecedented. They did a lot of financial repression, meaning that people couldn't withdraw dollars from the accounts. At some point, the exporters were forced to sell export revenues in dollars to the Central Bank of Russia. So there was a full set of tools that the Central Bank and the Ministry of Finance used, and it turned out to be sufficient to stop the potential financial currency crisis in 22. There is a big kind of theoretical question. Is it possible at all to inflict a proper financial panic on a country that doesn't have a fiscal deficit, that doesn't run a current account deficit? I mean, obviously, if you have a fiscal deficit, you're in a problem to begin with. If you run current account deficit, you're in a problem to begin with. And any policy or sanctions policy can have a disproportionately large effect. But if you start in the economy without those problems, the sanctions probably have a very limited effect to begin with. And that's sort of, I think it's an open question. Was it like a blunder of the Western coalition not to do more decisive sanctions, or there was just not much to be done? The Russian government had enough tools, given where it started, to stop the potential crisis. But what we've seen since then, and now this is really a period of kind of aggregate demand-driven recession. Aggregate demand-driven inflation, which the central bank is trying to address with very high interest rates. I mean, as of the summer, the interest rate came down. So right now it's not 21%, but it's, I think, 17 or 18%. So there were two times the policy rate's been cut, but it's still at 17 or 18%. And it's very high interest rate, and it does not quite slow down inflation to the target level. So if inflation is not 10%, it's probably 7 or 8%. Nobody knows exactly what the precise number is, but we operate in with those. It's also, we know it's not 20%. So it's somewhere between 7 and 10 in most likelihood. For different categories of goods, inflation can be higher, but it's a manageable but high single-digit inflation. But the interest rates are very high, and sort of what this interest rate reflects. Well, this is another fairly crazy picture. So what the military economy has done to Russia. And it's a combination of many factors. It's a combination at first of people leaving the country to some extent, but a lot of people returned. So there was a big immigration in the first year. I don't actually have exact numbers to know what fraction of the people came back, but significant fraction of people came back. A lot of people were drafted to war. A lot of people were engaged in military production. And so this is the unemployment rate, which is at completely unnatural levels, right? So no market economy has an unemployment rate of 2%. And what happens really is that the central bank is trying to fight expansion of aggregate demand with a high interest rate, but the government keeps putting fiscal resources into the economy. And so the central bank is trying to limit aggregate demand and expenditure and investments in the private part of the economy, but the government has put in more and more fiscal resources into the military part of the economy. And on net, the central bank, even with that high of an interest rate, has a hard time kind of like slowing down economy sufficiently to like normal inflation levels and normal unemployment rate. And so this is the first big problem. One has to realize that inflation is not something that will stop the war, and most likely, unless it's a complete runaway inflation. The 10% inflation is not what's stopping the war. What can stop the war is a major fiscal problem. And so what we've been seeing in the last year, at least, or a little longer than a year now, is that there are fiscal problems. And again, I mean, you know, it's important to acknowledge that things are not sustainable, but it doesn't mean that things are not sustainable and will collapse today or tomorrow or like 6 months from now, right? These are the sizes of fiscal deficits that could be sustained for a fairly long time. And so there would be mild adjustments along a lot of dimensions, right? VAT will be raised, and I think maybe, I'm not actually exactly sure if VAT reform has been passed already. I think there's a 3% increase in VAT, but like 3% increase in VAT is not something that stops the war, right? There's going to be maybe more inflation, so maybe instead of like 8%, there would be 12% inflation. But we're talking about this, ruble will depreciate probably, and this all increases the fiscal space for the government. There will be some other types of taxes. But we're not talking about a fiscal problem that will put an end to a war and make it unsustainable. What's more important is even if there is a ceasefire and there is a possibility or probability of a ceasefire, it doesn't look like Russia will stop being a militarized economy, right? I think the fact that Russia is a military economy is going to continue even after the stop of the war. And in a way, for Europe, this got to be the major concern, right? Like, what will Russia do with all the stockpile of missiles that it will create when there is a ceasefire? If there is a ceasefire, for 6 months, it will create enough stockpile of weapons to have like a full year of war, going forward with a big country, right? And it doesn't have to be Ukraine, right? It could be, another country anywhere else in Europe or Asia. And so this is should be a major source of concern with Europeans. I mean, right now, Ukraine is largely solving the problem for Europeans, but like when there is a ceasefire, who will be solving that problem, right? And I think that's the right way of thinking about it. I don't think the end of the war will put an end to fiscal deficits. The fiscal deficits would continue. There would be mild adjustments here and there in the economy, and military production will continue in Russia. And so it doesn't seem like there is any solution for Europe other than to ramp up their military production to sort of like stay at least on par, right? And so the last slide, and then we can have a discussion for sure. Like if one says, but what are the long-term consequences? And people, think about technological transfer, that, Russia was hoping to receive technological transfers from other countries, from its trade partners, from European countries, now maybe from China. Sure, it's a big problem. There would be less technology, but technology bites at the horizons of decades. It doesn't bite at the horizons of years. But if you think about the most acute problem, I think, if you think, imagine somebody wanted to really be in a position of kind of promoting the welfare of Russians, or I don't know, like the well-being of the country from the perspective of the long term. And this picture shows how devastating this war is, right? Obviously, the war is completely devastating for Ukraine. But if you think about Russia, it's devastating for Russia as well. And if not it's not measured in percentage of growth of the economy. It's really not about whether in one year there would be a 4% growth and another year it would be a 2% decline. When you think about it, it's really kind of what it does to the population, right, of the country. And it's been 1 million dead and wounded over this 4 years, which is like an order of magnitude more than deaths in the Afghanistan war that lasted a year. And like the conventional wisdom was that the war in Afghanistan in the 80s was one of the things that put an end to Soviet Union, right? But Putin sustained an order of magnitude more casualties. And the picture on the left is the age and gender pyramid in Russia. And you see this kind of gaps in it. And so this is this gap is the Second World War. These are people who are 50 to 60 years old now. This is the unborn during the Second World War. This is not the killed during the Second World War. This is the unborn. And so this is the economic collapse in the 90s, which coincided with the kids of the people unborn during the Second World War. And now it's exactly a generation later. And the age transition happens everywhere in the world. I mean, speaking about kind of US is one country that potentially could have a luxury of resolving the problem of sort of age transition with immigration, and maybe US will not choose to do it, or in all likelihood will not choose to do it. But everywhere in the world, the fraction of people who are older than 60 is going to be more than half soon during this transition. But Russia is doing this kind of completely crazy policy of eliminating both the people who are in the age of like 20 and 30 and those who will not be born as the result of the war. And like in the long-term sense, this is by far probably the major consequence. The problem, of course, is that none of this can put an end to the war. I mean, in a foreseeable perspective, right? This is something that will kick in over, decades as well, and will be a major, the cost for the country going forward. But, neither this nor, what we were talking about, nor this forecast is something that kind of can give hope that it would be sort of the economy or other kind of non-military challenges that will stop the war, and that's why the war continues, right? And so I think here is where we need to update our priors a lot. If there was a belief that economic tools can be more potent, I think we have to accept that given at least the resolve of countries to use it, they turn out to be much less potent. And in the end of the day, it's the war of attrition, partly of economic attrition, but to a large extent of military attrition, and it will end with some negotiation because one of the sides will be sort of not able to sustain it on the battlefield, probably not in the economy. One last thing I was going to say, this all assumes that Ukraine has resources to continue, and Ukraine relies a lot on the West for financial resources, right? And so we can talk about that as well. I'm much less of an expert there. Again, one thing to mention is the magnitude of the economic problem is not large compared to COVID, for example. It's just different orders of magnitude. But it's a big problem for Europe, which has no fiscal capacity, right? And so as a result, there is this big question whether the economic help to Ukraine will continue, and everything that I say sort of makes sense, assuming that the help will continue. There is this big issue of frozen assets, how they will be used, and so on. We can probably talk about that. But assuming that economic help to Ukraine continues, there is no economic situation in Russia that will put an end to it, right? The end to it will happen when there is a complete stalemate on the battlefield, right? And that I think is the assessment that one can have given the current state.
Oleg, thank you very much. I wouldn't say that you made me extremely optimistic about the next months, if not years of war. Because basically, when you talk to people who come from Kyiv, I just yesterday spoke to somebody who spent more than a month in Kyiv. There are plenty of Western military specialists who are preparing for the future war in Europe. And basically, there is expectation that Putin is going to start the war in Europe. And basically, he doesn't have any other, option, some people think. Now, but let's go back to, when we spoke about that last year, or when was it, when you spoke at my seminar at Harvard, your idea was that United States were able to put much more oil on the market. And that was possible with the help of, if there was a government decision on the part of the American government to export much more oil and subsidize some of Shell oil, because Shell oil, is not really, Shell oil companies are not capable to sustain their production unless the price is over $70 per barrel. So, but now we see that the prices are, we see that Ukraine armed forces successfully has been bombing Russian refineries. According to the recent Economist, Russia lost about 20 to 22% of its output as a result of that. As far as I remember from your last talk, Russia covers lots of its military expenditure out of windfall profits from oil, right? So question is, so there are several schools of thought. One, let us do what was done under Reagan in mid-1980s when, oil prices went down the hill and Soviet Union collapsed, unable to sustain the Afghan war, expenditure inside, and etc. There is another school of thought that it's important to destroy Russian refineries because Putin is paying, unlike it was with the Afghan war, when there was draft and a lot of people inside Russia were inside the Soviet Union were very much against the war because it was draft. Now there is mercenaries. Basically, it's the army of mercenaries, people who are paid to kill Ukrainians, right? So, and if Putin will be lacking resources, then maybe he won't be able to hire as many soldiers as he's capable to hire now. That's another school of thought that you have to do something with his revenues. But you say that there is always the option of ruble depreciation. So he can just they can publish more, print more rubles, and this way they're going to cover the expenditure, the war expenditure. So basically, I'm trying to figure out to understand. Economists suggest that that Ukrainian tactics of destroying Russian refineries may succeed, but judging by what you said just reported, it's not an option.
Okay, so let me clarify a couple of things here. I think this is very important. So this, just returning to this picture, one strategy, and you said exactly right? If oil prices go down much below 60, it's not going to be sustainable for the U.S. to even sustain the current levels of oil production, right? So the strategy has to be that you keep oil prices fairly high, like at 60 at least, but you replace the Russian oil with some other oil, whether it's the US oil or it's a Gulf countries oil and so on. And this is something that hasn't happened. So there hasn't been much substitution. There is a scenario which US will not be interested in when oil prices collapse, right? If there is a global recession, there is a decline in Chinese growth, decline in growth in US, which pushes prices down, right? And during the pandemic, oil prices were, famously at negative levels, but they were very low. So during the pandemic, oil prices did fall to around $20 a barrel for some period of time, a short period. So there is that scenario where it's not something that would be a conscious U.S. policy, because U.S. would not want that level of oil prices. That would be a collapse of the oil sector here.
Even with this Trump's notion, drill, baby, drill?
Yeah, well, U.S. oil requires prices sort of around $60, something like that. And so if they were to fall below 40, U.S. will not be happy about it, but there are events in the world economy that can make it happen, and that's exactly what happened. There was a decline in prices in the late 80s and the late 90s, and if sort of Putin's government was prepared for that before the war, it had all these resources to smooth out such a collapse. Now it wouldn't be prepared for that. So if there is a natural event in the world economy that pushes prices below 40, that would change things quite dramatically. There is a more organic situation where oil prices stay around 60, but gradually Russia is pushed out of the Indian market, maybe pushed out of Turkey, unlikely pushed out of China. That's just not going to happen, right? This will increase the fiscal problem, and this can be consequential, but it's not something that will stop the war immediately, right? It does really require a crisis event, a big collapse in oil prices to really make expenditure unsustainable.
You're talking months or years?
If oil prices fall below 40, this could be quick. This could be quick. If we're talking about substituting out 10-20% of Russian oil, it will magnify the economic problems. It will make things less sustainable. And what's interesting about autocratic regimes is oftentimes things break unexpectedly, right? You never know when the bottleneck happens, right? It might look okay, the statistics is hiding something, and then suddenly it blows up. So there is a possibility. So the point is, you cannot count on it. That will put a stop to the war quickly, but there is no reason not to do it. It's an important policy that needs to be done. I don't know if you've seen in the news recently, maybe Trump administration will compel Europe to have tariffs on China, which will become a Ukrainian victory fund. I saw that in the news. a lot of these things, they can have effects and they all need to be done. None of them is a decisive tool, right? And I think this is sort of important to acknowledge. And this is talking about the oil market. The last thing that you mentioned, I think, is completely fascinating. How 40,000 casualties in Afghanistan were such a much bigger deal in Soviet Union, which you would think it was, like a very consolidated authoritarian country. But 40,000 casualties over a number of years in Afghanistan were such a big deal, right? And I think you're exactly right. It was a much more egalitarian country as well. And sort of Putin really figured out how to hack the market economy, including in terms of like compelling people to go to war. And this is something, if when people talked in 22, 23, the assumption was once this number reaches 100,000, it would be unsustainable. I mean, I don't know if you remember these conversations,
Yeah.
but the expectation was that if you inflict enough, if Ukrainian military forces inflict enough damage, and the threshold was viewed as 100,000,
100,000 deaths or
100,000 casualties. Yeah.
Casualties. But there is, as far as I understand, according to the Western intelligence, it's the figure is much bigger than that.
Exactly. No. And so this
Yeah.
is the completely unfathomable thing, that you are able to sustain an order of magnitude more casualties, and this doesn't put an end to the war. And so I think this really, the reason why I'm emphasizing it is I think it should put things in perspective. 10% inflation will not put stop to things if a million casualties did not, right? It's just a different order of magnitude as a problem, right? Like, so expecting that sort of like economic sanctions on the margin that are chipping away 10%, 20% of the economic capacity of Russia to lead the war, but it's completely different order of magnitude as a problem as, the ability to send hundreds of thousands of people to war. Like, if Russia manages to do that and still manages to do it 4 years after the war, these economic problems are just a different order of magnitude, right? So this is why trying to find an economic solution against these facts, I think, is maybe was an over-optimistic view. But also, people couldn't believe that this would happen after 4 years of war and Putin would continue. And I think it's just important to emphasize the scale of this fact.
There is the recent report suggests that the United States may go for the regime change in Venezuela. Venezuela used to be the third biggest supplier of oil on the world market. So if Venezuela returns back to the oil market, would you expect the oil prices to go, beyond 60? Or it's just,
I'm not an expert in the oil market, but the conventional wisdom is that you can only have sanctions against 1 or 2 out of 3, right? Venezuela, Iran, and Russia. You cannot have sanctions against all 3 of them. So if Venezuelan and Iranian oil are on the market, they would push out part of the Russian oil. It looks like Saudi Arabia is willing to expand oil production. And so we'll see. Like, the reason why oil prices are coming down is that substitution is happening. It's just happening very slowly, right?
Do you expect, would you think that Putin will be able to substitute oil revenues with something else? He already lost gas market, right? Gazprom is in bankruptcy. It's a bankrupt, it no longer exists. Once the biggest Russian company. Do you see any possibilities for Russian economy to cover oil expense out of something else?
No, like, absolutely. Like, oil and gas were the 2 key sources of revenues. The smaller those sources of revenues are, the bigger is the pressure on like fiscal situation in Russia. There is no question about that. There is nothing it could be substituted with. There is no industrial production that could be exported. One thing to show is, Russia is still in a situation of trade surplus. So it's not like Russia is running a trade deficit, even given the gas situation, right? That gas is not being exported anymore. I don't know exactly, is it 10 or 20% of gas exports that are sustained relative to the pre-war situation? But Russia is still having a trade surplus, right? So, problems happen in countries where they have to run deficits, right? Fiscal deficit is there, trade deficit is not quite there yet. None of this exports are manufactured goods, right? All of these are natural resources, right? Pretty much. 75, 80% of these are natural resources. So the tighter are the sanctions and on exports, whether it's prices or quantities, the closer the situation will be to trade balance, right? But we're not talking about trade deficit even yet. So you chip away 20%, you probably go to trade balance. So it just, the scale of this problem is not like one thing is when you talk about a country with a major trade deficit, then it's very easy to tip it into an economic crisis. Russia is not at the trade deficit situation at current levels. So it needs to be a very decisive shift in the oil market to change the situation. So now one tool that we discussed is the ruble, right? And so if either oil prices come down or the quantity of oil that Russia can put on the world market comes down, there would be a ruble depreciation, right? Amazingly, remember we discussed that like 100 rubles per dollar was sort of the psychological barrier that was very important for Putin. He tried to do everything to keep ruble under 100 rubles a dollar. Well, right now it's not even there. It's like at 90. So it tells you, I'm not quite sure exactly what's the number, but it's like mid 80s or
7, 88.
Yeah, and so he has, a 13% devaluation that he can do before he hits 100. And then after he hits 100, he can devalue it by another 20%. And it would be just like, it's not like there's going to be a regime change in Russia if the ruble is 120 rubles a dollar, right? So he had that, like, we're talking, he's in a situation where he doesn't even have to kind of go to inflation of 20% or ruble of above 100 rubles a dollar. Like, situation is fairly stable for him in that sense. So he will first get there, and then once he gets there, he still has capacity to go some more, right? And the thing is, like, if this policy of pushing out Russian oil from the world market is successful, he'll get to that place quicker. And so once you get to that place, I mean, this would be an extra thing to the current inflation and interest rate that we observe and an extra thing to the current fiscal deficit that we observe. And we'll see something happening to a ruble. We'll see central bank trying to monetize more of the fiscal deficit and forcing banks to buy more of the government debt. We'll see all of this. But as of October 2025, we're not yet seeing it, which means that he has quite a lot of economic capacity to do it. Is it surprise that after 4 years of war, he still has that capacity? I think this is a remarkable surprise that he could sustain 4 years of war, keeping macroeconomic situation largely stable. He doesn't have the buffer anymore, right? Like he started the war with a big buffer. That buffer is gone. So any major economic event in the world economy can tip the country into a major recession. But that would require, an event of the order of magnitude of, financial crisis in 2008-9 or COVID pandemic, right? An event like that, Russia had the resources to withstand before the war in Ukraine. Russia doesn't have resources to withstand an event like that, but it does require that event happens. And nobody in the world economy would want to inflict an event like that to solve the war in Ukraine problem.
Looking back, do you still believe that those sanctions that were imposed against the Russian economy and especially against individuals were wise to do? People like Yevgenia Albats, for instance, the famous Russian entrepreneur who was kicked out of Russia because he was too good. So, but there's always, so he says that it was the biggest mistake because Russian oligarchs had to repatriate their money from the West, and billions moved back to Russia, and Putin got support from these business elites. Otherwise, because they had no option but to return back to get their money back to Russia, and as a result, there was lost possibility to create opposition against, real sustainable opposition against Putin.
Yeah, I think it's completely unimportant economically, right? I think it's a matter of fairness, and there could be arguments made that this individual sanctions in some cases were unfair. In other cases, there were not enough of them. But I don't think it would have made a dent on the aggregate macroeconomic conditions. In that sense, I view them as unimportant. They were stuff that was easy to do politically, I guess, and that's why it was done instead of stuff that's harder to do politically, which is, like for Europeans to stop buying Russian oil sooner. That was the hard stuff to do. Doing individual sanctions was easy. Doing financial sanctions was easy. And so things that were easy were done, and things that were hard were not done. But speaking of individual sanctions, I think it proved to be unimportant. One other topic, returning to this picture, it's remarkable that there is no Russian anti-war movement. I don't know how you evaluate the situation, but my evaluation 4 years after the war, there is no anti-war movement in Russia, despite these facts, right? And to me, this is completely remarkable, right? There are Russians in exile, there are Russians in immigration, but there is no anti-war movement within the country, and there is no Russian anti-war movement from outside, with very few exceptions. And so thinking that individual sanctions would have changed that situation, again, against this picture, I think it's just completely hard to imagine. There was one more thing I was going to say about it. Yeah, I think what's important is the things that are important and that make a difference is making Putin look weak. And so if you think about it, what made Putin look weak? Well, Prigozhin made Putin look weak. So not siding with Prigozhin for, the foreigners not siding with him, the Russians and immigration not siding with him, that was a major blunder. I think actually, Khodorkovsky was one of the few actually leaders abroad who kind of, I think, sided with it. But I mean, I think if you're thinking about blunders, that was the point of weakness for Putin. Individual sanctions are not making Putin look weak or strong, right? They just don't make a dent. Ukrainian military victory on the battlefields in the 22 looked Putin look weak. Decisive sanctions make Putin look weak, right? And this is the thing that can change equilibrium inside the country. But starting after he killed Prigozhin, he completely consolidated the situation in Russia, and he no longer look weak. And his world standing, he no longer looks weak. And so if you think about what could have turned, Russians away from Putin, if they thought of him as a lame duck, and there was a window of an opportunity when he did look like a lame duck, right? Like, I mean, I remember I had conversations with different banks working in Russia that were putting in their models a probability of 40 to 50% that Putin would be out of power by the end of 22, right? And so this was the true sign of weakness on which Western countries did not capitalize. I don't think individual sanctions make a dent. One other thing I want to point out about when you talk about Prigozhin was not a coincidence, right? Prigozhin was a reflection of this picture, right? Like when 1,000 people were dying a day, Prigozhin was popular, right? He did reflect the fact that, Russians were not happy with 1,000 Russians dying a day. And so he consolidated that. Amazingly, since his death, there is nobody in Russia, there is no anti-war movement, or in other words, there is no consolidation of this opinion that it's a problem that so many people die every day. And I think that's kind of like a absolutely remarkable fact. And individual sanctions, well, who really cares about them? Apart from people for whom it acutely feels unfair, right? So this is not a question of really major policy impact. It's a question of fairness, and to me, it seems like a second-order question, actually.
I see your point about the absence of Russian anti-war movement. I just want to remind you that after the war started that's people who are trying to sell me, the stocks for the new Calvi company in Mexico. Anyway, there is a great scheme going on, with that. Of course, they're not selling anything. But anyway, in just, remember when the war started, more than 2 million Russians left. And more than 2 million Russian then, about, according to Auzan, your former professor, the dean of the Moscow State University's economic department, about 640,000 returned back. Because they were unable to find jobs in Europe, because they were unable to find, to get, work permits in Europe, and it became just impossible for young people to make any money. But the most important thing, what Putin did, is that he put all those who are capable for street politics, he put them in jails. That's why he killed Alexei Navalny in February of 2024, precisely because of that. He killed him. Navalny was murdered in this Arctic penal colony in February of 2024. He was the one who was capable to energize people and to bring them out on the streets. Or everybody else, they were in jails. Listen, all my friends, each and every of my friend now is either in jail or, they were released from jails and kicked out of the country. Each and every one. Mikhail Krieger, who is now, he's on hunger strike, on dry hunger strike. So who is going to do this? There was a girl in St. Peter just lately, who 18-year-old, she was singing, forbidden songs on the streets of St. Petersburg. She was arrested 2 days ago, and she has a sentence of 13 days. And now, the minute she's going to be released, she will go in jail again. So it's impossible. People are dead afraid. We haven't seen, in Russia the kind of, these sentences that we have now. 15 years, 20 years, 25 years in jails, the amount of those sentenced for treason is comparable to the amount of those who sentenced for support of Trotsky back in 1937 or 38. People, I cannot blame them for that, because I know that, I cannot return back. I will be arrested at the border. Besides that, I'm forbidden now to teach, to write, to public speakings and all this kind of stuff. Anyway, so I guess, my last question, and then, I will ask, I will ask questions from the audience. Do when you speak to technocrats in Moscow, and my sources, so, I don't have, yes. So they say that Putin is in bad need of a break, that he himself is looking for some ceasefire, because otherwise the continuation of the war in Ukraine requires major resources that he will have to start draft. Just they don't have enough, they used to hire 30,000, 40,000 people per month. They no longer have this amount of people who are ready to die, even for, for this big money that they pay. That there is some problems with, with economic resources. And basically, they say that Putin needs ceasefire. He badly needs ceasefire. And that's why, there is still all these negotiations with Donald Trump, because they believe that Trump is capable to convince Ukrainians, Zelensky, to go for the ceasefire. In this case, Putin will get a break. Do you think that what is your approach? Do you think it's dangerous to give Putin this, sort of, ceasefire, this break, so he will prepare for the major war in Europe? Or do you believe that Putin is really lacking resources and just a bluff, which we see that he's bluffing, pretending that he can continue this war forever?
Well, so clearly things are not as dire that he would just ignore the negotiation in Alaska, right? So essentially the reason why the negotiations didn't continue, he was not interested. So maybe he's pretending really well, but like if things, sure, and so we'll see what happens after that. I mean, we can put sort of our subjective probabilities on what would be the outcome. But at least a few months ago when he was in Alaska, things were not sufficiently dire for him, right? That he was willing to fully ignore that negotiation. When things will be dire, we'll also see that, right? But I think I mentioned this. I think it's very important to realize that in authoritarian regimes like Russia, there are a lot of hidden states, right? Like hidden, unobservable things that we don't know what's happening really in the economy, and things can be much worse than we're seeing, or things can be actually totally fine, and we just would not know unless there is some kind of crisis event that uncovers the unobservables, right? And so it's well possible that he's starting to hit the constraints. It doesn't look like the constraints are exactly economic, because when we talk about the orders of magnitudes of economic problems, it's a couple of % of GDP. It's not something that, I mean, again, it's unpopular to raise taxes, it's unpopular to reduce pensions. But, if people are fine with the war, they will be fine with a cut in, real purchasing power of pensions. And that's not something that's going to stop the war. That's why I don't think the situation is dire. So now what you bring up, something that I actually don't have good information about at all, it's true that he needs 30,000 soldiers a month, given the intensity of the war. And at some point, that will have to be unsustainable. How he managed to sustain it up until now, it's a complete puzzle to me. Is he reaching the capacity there? It's well possible, but you would need a sort of like a military or a draft expert. But again, draft was hugely unpopular in September 20. When was it? September 22. But if he really wanted to do it, could he do another draft? Probably he could. So he could probably draft a couple of 100,000 soldiers if he really wanted to. And I don't see a regime change triggered by the draft immediately. So it will definitely give him some time. So I'm not extremely hopeful that, like, he clearly has his agenda and he thinks he maybe is winning, right? And like, I think we have to take that as basically our prior. So now imagine there is a ceasefire, and this we already discussed. There is no chance that he will stop the military nature of the economy. It will keep being a military economy for foreseeable future, right? I mean, maybe he's not going to have to spend $150 billion a year, but he will be spending $100 billion a year. And he will be producing the missiles and he'll be producing the drones. And he produces them. The only other country that produces it at comparable magnitude is Ukraine right now. And so this problem just doesn't go away, right? And that's why you're absolutely right, I think. And I think there is an understanding in Europe, especially, in Central and Northern Europe, and especially by military experts, that this problem doesn't go away with a ceasefire, right? And so, obviously ceasefire is very important for, people who are dying on the battlefield, but it doesn't solve the problem, right? And I think this is the right framework for, again, if there is clearly the US withdrew itself from the war in Ukraine and doesn't want to be an active participant there, but it's myopic, but it's the big problem for Europeans to figure out how to address, and it's not obvious that there is a solution.
It's sort of a deadlock. Okay, thank you so much. Now, I would like, to get questions from the audience, please. Yes. Okay, so let's start with you, please. If you want to name yourself, be aware that these will be, we record the session, so it will be downloaded on the web. So if you don't want, your name to be public, you are welcome just to say, hi, I'm Ivan Ivanovich, nice to see you. Okay. Okay.
When you were talking about whether there's a stalemate or a ceasefire or not, Russia will continue being a military economy. We see risk-averse countries like Germany now taking on debt, and they're planning to use that debt to militarize their economy. And I think whether Russia, of course, Russia will continue militarizing their economy. I think that will have a domino effect on Europe, where European countries will be forced to spend more, will be forced to take on more debt and forced to spend more on their economy, spend more money on their military, and that will, in a sense, raise the GDP of Europe as a whole and introduce more liquidity to the financial markets there. So do you think it's a good thing for Europe to...
The best thing is not to have a war and not to have military expenditure. It just turns out not to be an equilibrium, right? If you don't do military expenditure, this opens the possibility for a rogue, agent or country to start a war, and you're just not prepared for it. So this is the best outcome. This is not the world we live in. So the only necessary outcome for Europe is really military expenditure. So now the first figure that I showed, economically speaking, Europe is 10 times larger than Russia. The problem of Europe is that there's fiscal capacity. They have to do reforms that are hugely unpopular. And so it takes out half of Europe from the possibility to do it. Well, if you take France, France can probably do military production, but France cannot do deficit spending on it, right? Germany, Scandinavia, Poland, some Central European countries are in a much better shape and in a much arguably bigger need to do it, right? And so there is room for that. I fully agree with you, actually, that this could be used for boosting the economic growth, right? Like some countries can revive the military sector. This can be a source of exports for countries, including Germany, potentially France. So there could be some economic strategies built around it, given that it's a necessity to do it. And the fact that it's not done, I think, is a big blunder, that it hasn't been done in the last 3 years. In a way, the thing that does stop the war and potentially stops the war for good, if Ukraine and Europe have the overwhelming capacity to basically defend, that takes out the incentive for Putin to attack elsewhere, right? And this just requires a lot of weapons, which just need to be produced. It's not like a very complex thing. It does probably require debt financing. There is very interesting conversation to be had. Is it actually good in current state of the world where investors are potentially willing to diversify away from American assets, it's probably a good idea for countries that have fiscal capacity in Europe to expand that. And this is just economically a wise decision, irrespectively of like how they're going to use that debt. So it seems like there are fundamentals there, at least for some countries, to do it in a way that's actually economically beneficial for them, right? So I think that's actually exactly the right way to see it. Hopefully, European policymakers kind of realize that as well. And I think when you talk with the policymakers in Europe, they do have that understanding. But it could be something that are highly politically unpopular among the populations, especially in view of the fact that these countries need to either cut pensions or increase pension ages. Like all of this might be viewed as kind of just very politically unpopular. But on the other hand, in some countries, it could be used to their advantage for sure. So I think, yeah, that's the right way of thinking about it.
Thank you. Yes, please. Yes.
Yes, Yevgenia have two questions. So in broad terms, we always talk about guns and butter. So the question is, how much less butter is an average Russian getting as a result of this war? And the second question is, how much of their distribution of property among the elites affected that amount of butter?
Yeah, I mean, I think it's very interesting. I don't think we have good studies. So part of the, like a minor damage, but an important damage that the war did is we lost high quality economic data and research from Russia, right? There is just much less information coming out. We do know the GDP number with a good degree of certainty, but within those GDP numbers, there is a big redistribution, as exactly as you're saying. So I actually have never come across credible estimates what was the decline in like real consumption, right? Apart from the GDP numbers, the interesting numbers are about private consumption. And in all likelihood, it declined. It declined more than GDP for sure, but we don't have good estimates, right? What's also important is that there was a big redistribution between regions. So the regions that are much more involved in war, that receive a lot of transfers, quite likely GDP per capita and consumption per capita increased in those regions, right? And so it requires really good economic research to get at that. I actually haven't come across people doing that work. The other thing to keep in mind is that there was a boom of certain sectors in the Russian economy. The manufacturing declined as a result of disruption to imports. There are no inputs to produce many manufacturing goods, apart from the military sectors, but many services have increased actually. And so there was kind of like this military Keynesian stimulus to Russian economy. And so it's interesting and important to evaluate it on net. What's important here to like coming back, like Putin chose not to use the fiscal resources in other periods of crisis. He was very conservative in using them. He was very generous in using fiscal resources this time around. That's clearly the major project of his life. That's what he was kind of preparing the previous 20 years with fiscal conservatism with. And it's quite remarkable how powerful with this fiscal stimulus to the Russian economy was. Going back to, the previous question was about Germany. Can, Germany or Poland do the same? Probably they could. But in Russia, this was a massive Keynesian stimulus to the economy that probably sustained levels of living for a lot of people and raised levels of living for a lot of people as well. And so that's something that's hard to take out. I don't think that, the size of the war shock to the economy was so much bigger than the redistribution that I think the war and financial sanction and exclusion of Russia from like world financial markets probably had much bigger effect than the redistribution within Russia. So I would think this is just a minor effect. Exactly, given how big, like if you think about it, the redistribution is like violation of norms and property rights, but the war itself was such a big violation of norms and property rights that everything that happened after that is just like much smaller than the fact of the war itself.
Thank you. Yes,
Actually, one example that's very interesting is I thought that in the beginning of 2022, one thinking was once the war starts, there would be a sequence of defaults, right? Like, why would you pay back your debts if you know that the world is falling apart? But it was amazing that, for example, like all Russian airline companies defaulted on, they basically don't own the airplanes. The airplanes are owned internationally. So they defaulted on all of those contracts, but that wave of default didn't continue. Everybody else pretended that it's business as usual. So what was very remarkable to be in 22, that people within the country were willing to kind of go along with business as usual, which implied that there was no wave of defaults, right? Like typically we as economists would think, well, if the end of the world is close, this is the time to do the default. Why would you pay your debts if there is no kind of next period, right? But that completely didn't happen in 22, right?
Please.
So, right here. I think, obviously they're facing a lot of inflationary concerns that we talked about here. What is, in your eyes, at least preventing the Russian central bank, aside from those political considerations, from pursuing a policy of quantitative tightening here as opposed to just continuing with doing, deposit auctions or, I don't know, FX socialization or something like that?
Well, but I think the right way to think about it, there are two parts to the economy. The central bank is really suppressing the private side of the economy, both consumption to the extent that's possible and investment in the private side. And you do see like a major slowdown in most parts of the economy that's not the military production, right? So this is what the high interest rate is achieving, right? They have the means for that. The problem is that there is the second part of the economy that's completely insensitive to the interest rate, right? This is the fiscal expenditure. And companies in that, well, now there are some reports that the military companies are not being paid or not being paid on time, but until now that was not a problem, and they didn't have to worry about the cost of credit or the cost of funds. They were just receiving contracts from the government, and so this is the part of the economy that's becoming increasingly large that central bank has no control over. So no matter what they do, they would not, like this thing is not driven by the private economy. This thing is driven by the military economy over which the central bank has no control. There is a question, why do they care at all? Maybe they should just let it go and kind of reduce the interest rate and see what happens with inflation. But somehow they managed to convince Putin that it's wise to kind of keep it under control. And it's fairly amazing that they win in the argument over people who are putting more weight on the recession, right? Like where's the slowdown? Is this... So clearly, people in the central bank are winning the argument over people in the real sectors of the economy saying that they want lower interest rate, right? How they're winning the argument, I'm not quite sure. Why Putin sort of like listens to Elvira Nabiullina so much, I'm not sure. But as of now, and things might change when things maybe become more dire in the real part of the economy or the fiscal deficit, maybe then the central bank will be kind of directed to kind of monetize more debt, sell more of the government debt to the banking sector, and that will lead to inflation eventually. But so far they have not really been doing much of that, and it's fairly remarkable that they have not, right? Like they are in a pretty tight situation, and they are like seems to be committed to kind of disciplined monetary policy still. And like I wouldn't have we had this discussion with Yevgenia before, and she had other guests on her in her lectures that were pointing out that the central bank is kind of going along with what the central government is telling them to do, but somehow they managed to like there were instances in 2023 when it looked like they're going the path of monetizing that. But it's sort of remarkable how devoted they are to the policy of trying to stop inflation. I wouldn't have bet on that a year and a half ago.
Yes, please.
Russian studies. In those statistics, do they consider the revenues coming from the dark fleet? Is this visible?
I don't know. Yeah.
Yeah. And the second question is about, you said that the EU cut its dependency on Russian oil, but there've been lots of reports saying, like stating that the EU has increased the import of refined products from India, which is actually Russian oil. Oh, kind of substitution really happened.
Yeah. No, so great questions. I think there is big question to which I don't know the answer is what happened. There was this term called shadow reserves, I think, or I don't remember what was the exact term. But essentially in 2022, a lot of the Russian oil exports were not returned to Russia. So they stayed somewhere in the world financial system. The value of those kind of like shadow reserves were about $80 billion. It's about half a year of the war, right? I don't know why it was so difficult to trace where they are, but I'm not an expert on that. Same question, is something like that happening now? I think we have good reasons to believe that most of export revenues are being repatriated and they're counted. And part of it is that the exporters have to sell more than 90% of their export revenues back to the central bank. That's what sort of allowed to stabilize the ruble. That was sort of, when was it? This was summer 24. or maybe summer 23. I might be. So hard to keep track. It lasts for a long time, but I think it was actually summer 23 when they forced the exporters to sell revenues. And at that point, I think we have a high degree of certainty that most of the export revenues are coming back and calculated. So now your second question is a tricky one. So this is actually what happened. This is the customs data from Russia when they were willing to share that data. Now it's becoming increasingly hard to get a hold of it. And so you do see that Europe is not buying crude Russian oil. Europe is not buying Russian oil products, but it does buy oil products from India, which are the result of processing of Russian crude in India now. So as you can see, India in these bars was just not a customer of Russian oil before, and now it's the second largest customer. So this happens. It's better than if Russia sold oil products directly, right? Because part of the revenues are being taken away. We're talking, I don't know, we're talking about 10 or 20% of those revenues that are being shaved off. This is not a trivial amount. Would it be better if India didn't buy Russian oil but bought Saudi oil? That's kind of the current policy, right? Like, I guess the current attempt of the US policy is to have the shift in the world oil markets without changing the oil price, right? So basically substitute this couple of million barrels a day of Russian oil that India is buying with Saudi oil. If this happens, this is a major event. It's 25% of revenues, right? 2 million barrels a day is about 25% of revenues. You know, does it stop the war? Probably not, as we were discussing. 25% is not enough, but this is the amount of leverage that the US really might have in these negotiations.
That's wow. Okay, please, and we're going to pick up 3 last questions, and we have to. Yes, I'm sorry, we have to consult.
No, I'm good. Yeah.
Yeah. Okay, please.
So on this chart, why isn't the dark blue line completely at zero?
Oh, there is Druzhba. I mean, I'm not an expert exactly on everything, but there is this Druzhba pipeline that goes to Hungary. Did you? I don't know if Ukraine managed to stop the oil flow.
Yes, so far.
So that stopped.
Yeah.
This is before it stopped. So part of it is Druzhba. Part of it, there were exemptions for Slovakia and Hungary to buy some of the resources. I think mostly it's Druzhba, but maybe there is something else. So it's interesting to see what happens since Ukraine. I think they damaged the pipeline,
Yes.
and so maybe
The pipeline. Mm-hmm.
My other question is, occasionally now you still read about the idea of the US putting full force behind sanctions. What would those look like at this point? Like, what are we not doing?
Yeah, I mean, Russia still trades with the world. Arguably, at some point, there was a possibility of being much more decisive with the financial sanctions and making it much more difficult to do any financial transaction across the border. It's a big open question if US has that capacity, right? It has this capacity to do it temporarily, but most of the trade of Russia is now with China and India. And so how, stopping the trade with China is probably impossible. I forgot to put in the slide that I wanted, right? The big change in the world is that Western countries used to be 75, 80% of the world. Now they're only about a half. And so there are about the half of the rest of the world where, for example, US probably doesn't have capacity to stop trade of Russia with China. US probably has capacity to negotiate something with India, right? And so that's what we're talking about. So is it possible to have some bargain between Saudi Arabia and India and some other Gulf countries that Russian oil is replaced in this market? Probably yes. So that's part of the policy right now. Again, is this full force or decisive sanctions? The answer is probably no. It's not something that kind of stop completely an end to flow of both dollars and goods to Russia. So we're talking about, I mean, I think the right way to think about it, we're talking about effects on the margin, like chipping off 10 or 20% of revenues and tightening and it's important, I think it's very important to do that work because, it doesn't stop the war, but it makes it costlier to have it, which means that it will probably last less long, right? But, answering your question, I'm not sure that US actually has the decisive tool economically.
Last question, please. Okay. Can you raise up, your voice, please?
I have a question. Can we say that Russia created an alternative economic system with the new trade partners, with the new financial partners in Asia and Global South? For example, countries like Hungary, Slovakia, Austria still buying Russian oil. Russia still selling Russian grain to countries like Egypt, Turkey, Iran. And Russia still selling enriched uranium to USA. Right, like 80% of fuel chosen for commercial systems here in USA is bought from Russia. And new technologies are still entering to Russia through the great imports to the CIS countries, post-Soviet Union countries.
Yeah, no, it's directly related to the previous question, right? So clearly, there is major fragmentation of trade with Russian economy, but there are parts of the world that the Western sanctions coalition is not controlling, right? And I think there is a big question of, for example, the payment system. Will China be successful at completely having a parallel payment system that would allow China to trade in the world economy without reliance on the US infrastructure, right? Like if the answer is yes to it, then it's not much that you can do about it. And like indeed you're saying, well, this is the coalition of countries that could be centered around China that are completely insensitive to Western sanctions, right? If they don't trade much with Europe or US, and they use the Chinese financial infrastructure, there is not much that US can do. So I think these are actually big open questions, right? US believe that it has a very potent tool in the payment system sanctions. I think now it's not obvious that it's going to be the case going forward. It is an open question because, for example, the fact that Russia had a big trade surplus with India became a problem because nobody really wanted in the world markets to receive payments in Indian rupees. So like it's a big difference whether you're China or India still, right? Like China can centralize this payment system and do the clearance because China is such a major partner in trade for a lot of other countries. With India, the situation was difficult. Russia needed to rebalance trade so that basically as much oil as it sells to India, it needs to find as much goods to buy through India, right? And that's where the financial sanctions are still having a bite. Are we living through the last 5 years of financial sanctions of US having a bite? It's well possible, right? So that's the big concern about sanctions like that. You can use them only once, right? And you have to use them at the right time. And so maybe once you use them once, all countries will shift to alternative payment systems that are afraid that the sanctions can be used against them. So this is a distinct possibility. So now, is this alliance, economic alliance with China, is beneficial for Russia? I mean, it's a lifeline. It's an economic lifeline to Russia, but it's clearly a loss of a very lucrative, profitable market in Europe and replacement of a much less lucrative market in China. There is definitely less technological transfer that's happening. So none of this is like good news, right? But I mean, for Putin and for Russian economy, but it's not enough of a bad news to stop the war, right? So this is really the conclusion here. One last thing is there is this big question of whether the American technology still makes its way to Russia, and the answer is to some extent it does. Like here, the glass is sort of half full and half empty, right? Like Russia did manage with all the oil revenues that they had enough money to figure out ways around a lot of the sanctions to buy even US technology, right? But there was a lot of work put in to limit the ability to do that. So I'm not quite feel to be in a position to evaluate whether it looks more like a success or more like a failure, right? But yeah, it's somewhere in the middle.
So we have to conclude here, and let us thank Professor Itskhoki for his brilliant presentation and his tolerance to my questions and your questions. Your questions were brilliant. Thank you so much, and I hope it's not the last time that Oleg is going to speak here at New York University. Of course, Harvard is Harvard, but New York is New York, right?
Absolutely.
Okay, thank you so much, and thank you. So once again, the next installment of our series, Russia and its neighbors in search of a new paradigm, will be on October the 28th. Journalist Yulia Yoffa is going to speak about her new book, Motherland, about the feminist lens on the current situation in Russia and in the globe. And, anyway, so please come and be ready for your questions. And her book is coming out. There will be a book signing after the end of the question of the session.
Yes.
Thank you.
Thank you very much,
Thank
Jana.
you.